All right, good morning, everybody. This is the monthly market update for the month of March. Here. Not sure if you can hear it or not. Hopefully you can, but there we go. So, all right. We got a lot to cover today. So, first and foremost, I think there's a few people that are going to be trickling in, so I'll give it a few minutes as our guests trickle in. Again, so this is a monthly market update for the month of March. Thank you for joining me. This webinar continues our monthly sessions, so providing an opportunity for us to discuss what's happening in the global and domestic economies and the markets, and to provide you an opportunity to ask questions about what you're hearing or seeing, and how they might affect your own personal portfolio or financial situation. In the email invitation that you received, you should have received the market update quick hits. We will review that briefly. That summarizes some of the key points for the month of February. You are also welcome to watch the video blog by Chris Fasciano. He is Commonwealth's Chief Market Strategist and a good resource for just keeping in touch with what's happening in the markets and the world financial economy. So in addition to that video, I provide this to summarize some of those things that we see from his videos and other news media, and to provide an opportunity to, like I said, ask questions and talk about it. I'd also like to highlight that much of this information can be found on our website. If you go to www.leslieroperday.com and click on the Market Update tab, you'll find a lot of the resources that we're discussing here today, if you want to review that at a later point. And obviously this is being recorded, so if you want to watch it again in the future, if there's something that I go over that you didn't quite catch, or wanted a repeat of it, or you just don't have the opportunity to join us during the actual monthly market update video, go ahead and register for the video, and it will send you a reminder or notice once the video has been published to the website and is available for review later at a later point. So we want to make sure that it's available to you should you want to watch it or look at it later. Okay, so let's jump into it. I'm going to first just summarize what came out on the monthly market update, and this is the quick hits. So February was a challenging month for the stock market as concerns surrounding the disruptive nature of AI, or artificial intelligence, and shifting geopolitical risks weighed on investor sentiment. Domestic equities ended the month in the red, however bonds and foreign stocks fared better. So a couple of bullet points beyond the headlines. Obviously, it's a challenging market for February. We'll talk about some of the geopolitical risks, including the situation in Iran, and there are some indicators of slowing growth. We'll talk about that, and then also some of the shifting risks looking ahead. So let's just review the numbers, what happened in February and for the past year or so. So So February is a bit of a mixed month for the markets, driven by rising investor concerns surrounding potentially disruptive AI and shifting geopolitical risks. So there's some concerns that AI-related stocks were overvalued. So for the month of February, the S&P 500 was down 0.87%, so just under 1%. And the Dow Jones was virtually flat at 0.17%. However, the tech-heavy NASDAQ was down over 3.3% as investors pulled back on AI and technology-related stocks. And this pullback came despite improving fundamentals and strong earnings report with the average S&P 500 reporting 13.5% profits, which was well above the 8.4% estimated by analysts. So interestingly, this market pullback came in just as companies were reporting strong earnings for the fourth quarter. And not to mention that the earnings reports were actually coming in widespread, with 10 of the 11 sectors beating expectations. So it wasn't just tech, it was broad brush across the overall S&P 500. So that was actually pretty positive news. Now, if we look at year-to-date performance, right? So if we go out over the last 12 months, and because we're only looking at the first 2 months of February, I don't typically do a year-to-date report until we get further in the end of the year. So looking at the previous 12 months, we had the S&P 500 over 15.52%, the Dow Jones up 11.7%, and the NASDAQ up 20.27%. So by all means, really positive market returns over the past 12 months. If we shift to international stocks, international has been on a real winning streak lately, at least until the Iran conflict started. So in February, the MSCI, which is the international index, was up 5.04%, okay? And over the previous 12 months was up 40.46%. So international has really been the winner over the last 12 months and even into the month of February. A lot of that has been driven by a shift in sentiment versus the U.S., as well as kind of a softening dollar. So the softening dollar has put a tailwind on international stocks. However, since February 28th, which is when the U.S. and Israel first started their attacks on Iran, international markets have given back about 5.78%. So basically, most of the growth from February has been given back since February 28th. As well, on the U.S. side, on the domestic side, if we look at just since February 28th, so the S&P 500 was down 1.42%, and the Dow is down 2.6%. So, material, but not overly concerning. And you can kind of see in this chart the significant pullback on the international index. So, now if we go back to the February, the bright spot in February was fixed income. The Bloomberg aggregate bond index was up 1.64% for the month on falling long-term interest rates. 10-year treasury rates fell, so the interest rate on 10-year treasuries fell from 4.26% to 3.9% at the end of February. So primarily driven by fears of the Middle East conflict. And additionally, as many people are aware, mortgage rates have also come down, with the average 30-year fixed loan rate falling below 6% for the first time in almost 4 years. So good news, somewhat good news for home buyers that are looking to get a mortgage. Mortgage rates have started to accommodate. Now, however, the bond market did give back some of that after February 28th, with the bond market declining by 0.96%. So there is some volatility here because of the Iran situation, but largely there's a continued expectation that mortgage rates will probably continue to soften a bit, but we will see how this Iran situation continues to affect the U.S. and the world. Regarding interest rates, the markets are still expecting 1 to 2 rate cuts in 2026. So we will see when the new Fed chairman takes the reins. The current nominee is Kevin Warsh, and so despite President Trump's push for lower rates, what happens will depend largely on the economy, the job situation, this international situation, and then what the Fed board ultimately decides. So there's an expectation of 1 to 2 rate cuts. The jobs situation has been a little bit soft, so we've been seeing a slowdown in hiring, with the U.S. losing 92,000 jobs in February, and the January report being revised down to 126,000. So that could be indicative of larger issues under the surface, but it also could be related to the growing impact of AI technologies shifting our workforce. So I think it may be still a little bit too soon to tell. So regarding the Iran situation, it's difficult to say how long this is going to go on, or what the longer term impact to the markets is going to be for your portfolio and financial situation. We have definitely seen crude oil prices spike. Before the conflict started, a barrel of oil was trading around $65 per barrel. It's currently trading around $80 to $90 per barrel. And last week after the conflict started, it spiked to over $110 per barrel, but has since come down from that spike. Sustained higher energy prices will put downward pressure on economic activity. However, it will take some time for those higher oil prices to work their way through the global economy. So while we have seen higher prices at the gas pumps pretty quickly, I don't anticipate that it will drag the US or the world into a recession unless it drags on for an extended period of time. So the US is already the world's largest oil producer, so we have plenty of our own energy supply, but it is a global oil market, and approximately 20% of the world's oil passes through the Strait of Hormuz near Iran. So if the US is able to get the strait open again for the rest of the Gulf states relatively quickly, then that should ease concerns about an oil shortage. Okay. So aside from the ongoing geopolitical risks impacting the market, there are some domestic risks to watch for. Like I said, although the fundamentals in terms of company profits have largely been positive with strong earnings growth, overall economic growth in the U.S. has slowed from 4.4% in the third quarter of last year to 1.4% in Q4. And although that's still positive, it's a dramatic slowdown. Much of this could be attributable to the decline in federal spending, as the current administration has been focused on shrinking the federal government and spending. It also could be somewhat attributable to the federal government shutdown that happened in October. So we'll see. The federal government has an influence on it, but there's also potentially a bit of a contraction in spending. So we talked about hiring a few minutes ago. While the GDP, the economic output, and job creation situations have slowed over the past few months, looking forward, there's a broad expectation for growth to pick back up through the rest of 2026, barring things being dragged down by the Middle East conflict. Consumer and producer confidence has actually been showing signs of improvement. So that bodes well for future spending growth and continued economic output, and thus market growth. So despite some of the ongoing geopolitical and domestic risks, the US and more broadly the world seems to be in a decent place economically. Although the markets have pulled back from their recent highs, with the Dow Jones closing at an all-time high of 50,188 on February 10th. Fundamentals do still remain strong and solid for now. So look for continued growth throughout the rest of the year. So, despite the uncertainty with the Middle East right now and some of the other things going on, we're actually in a pretty good place as we look forward to spring flowers, as long as we don't get the April showers that rain us out. So, all right, so that is it for the time being. Let's take any questions that anybody might have. Just as a reminder, any questions should be relatively general and not specific to anyone's personal accounts. If you don't have any questions, but you'd like to speak more privately, feel free to reach out to me directly and we can have a conversation about your personal situation. All right. You're welcome to unmute your mic if you have any questions. I'll just give it a minute or two. If there are no questions, then I'll just move on and it looks like this slide did not get updated. Okay, so let me just speak to what's coming up. So on April 8th, Wednesday, April 8th at 11 a.m. will be our next monthly market update. So please keep your eyes open for the next invitation. We also have other webinars scheduled on various financial planning related topics. The next one will be on Wednesday, March 25th at 12 p.m. The presentation is titled, What About Taxes?, in which I will be sharing a number of common tax planning strategies. So given it's tax season, it's time to talk about taxes. So April 8th at 11, the monthly market update, and Wednesday, April 25th. I think I said March. April 25th at 12. Let me make sure that date is the right one. I'm sorry. Wednesday, March 25th is the tax, What About Taxes session. So April 8th, market update. March 25th, the tax presentation. Okay. And then following up in April, I'll be doing a session on Roth conversion strategies if that's of interest to anybody. All right, so you're welcome to find any of my previous videos on financial planning topics on our website under the events section. Just go to the leslieroperday.com website and click under events and find the past events. You'll be able to find the previously recorded videos. So as always, if there's a topic that is of interest to you or you'd like to learn more about a various topic, please shoot me an email and we'll see if we can get it added to the schedule. So if that's it, that's all I have. If there's anything else, I wish you a wonderful rest of your March, and we will see you again next month on the 8th of April. All right, take care, everybody.